Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for April 9th, 2023. And for a lot of you, today is Easter, and you're celebrating your Easter holiday with your friends and family. If you're not celebrating Easter and you're celebrating Passover or other holidays, I just hope you're enjoying the time with your family and friends if you are, and enjoying the long weekend. Now, I did want to do a video, the week ahead video for this week, because we have a busy week next week, and we're going to talk about the inflation data that's being released. We got some retail sales. We got a lot of, like I said, a lot of data coming out next week. So we've got a lot to talk about, and we just came off a jobs report. And so there was a lot of volatility. Before I get into all of that, I just wanted to say thank you all for being here. And if you like these videos, you think they're helpful for you each and every week, give us a thumbs up. For being here on Easter and pushing out analysis for you for free. Also subscribe to the channel so you don't miss any of this or these week ahead videos or any of our daily videos that we do. And make sure you join our free shows that we do every single day. The Flow Show in European trade, they'll be off on Monday for holiday, by the way. And the Face Show that's free, we'll see you on Monday. So we'll see you there. All right, let's get into the markets, and let's get into what had happened this last week. We had the jobs report, and if you actually just look at the numbers really quick, let's just go take a look at them right here. You can see that we still created, whoops, that's Thursday. Here we go. We still created 236,000 jobs. I actually thought the data would start to come in a little bit weak this month, but it looks like it's going to be next month, as part of this month wasn't even included. Or part of this month, we started to see a drop off. But you can see the economic data has been starting to weaken. So we expect that this next month is going to be a little bit worse. And I'm sure forecasts are going to reflect that. The fact of the matter is, though, is the employment picture is still relatively strong. And the way the market reacted, and if you look at the S&P and how it reacted on Friday, at least while the futures were open for that short period of time, the initial reaction is higher. But as traders sit and think about it over the weekend, over the long weekend, no one wanted to be short. Everybody's like, okay, data is decent. Let's go ahead and just kind of shore up some positions. But if you think about it, this really suggests that the Fed is going to stay higher for longer, or they're going to keep rates unchanged for longer. Or in other words, they're probably not going to cut rates into this year if you continue to see economic data like this. And that could weigh on the market as we go into next week. So that's one thing that I want you all to think about is, the initial reaction right after the jobs data, the short period that the futures were open, we did see stocks actually rally, and they're holding up really, really well. And last week we drew out this line here, which was basically at 40.75. You can see how well that's holding. And I'm going to say that support and resistance is not an exact science, but it's a roundabout area, and you can see this area is really, really holding. But you can also see that resistance is holding too in this channel. And one of the things, if you listen to our daily shows, one of the things that I've mentioned quite frequently is I think we're in a process of just kind of building out like a rounded top over here, and we're going to see lower levels as we go into the remainder of this year. So I think that the S&P, if I had to extrapolate what I think is going to happen here, is I think that S&P is going to eventually spend the remainder of its year, back below 4,000, and eventually, trading down, towards the 3,500 level, barring any shocks or anything like that. I think that's what we're looking at. Just a consolidation period in the markets longer term. The reason why I wanted to mention that is because if you are long risk, unless the Fed really signals that they are going to be lowering rates, which with inflation at levels that we're at right now, and with CPI data coming out this week, and year over year probably going to be looking at least 5.2 to 5.3%, we're well off the 2% target the Fed's looking at. You could also argue that there's going to be some deflationary pressures coming through, and that eventually we're going to be making our way towards that. But are you so sure about that? And I don't know if the Fed is either. And that's why, the inflation data is going to continue to be looked at and scrutinized each and every week. So keep that in mind as we go into this next week. Key levels that the S&P that we need to be looking at. 40.50 is the high, and this is going to be really important resistance for anybody who's long. And look, if we get back below this channel support, which comes in around 40.50, that's going to be a pretty negative for risk. I would be really worried about being long equities if you drop back below 40.50. 40.75 or 40.70 really is that support, but it's channel support that I'm more concerned with for the equity markets. I'm going to talk a little bit about currencies too, and then I do want to talk about rates. I want to talk about where gold's at, silver's at, some of the risks I see with those and cryptocurrencies. But let's just kind of go over a couple of currency pairs. First and foremost, I want to talk about the euro just because that's the big one, right? If you look at the weekly chart here and you take this 2021 high and just draw a little trend line like this through those highs, you'll notice that we actually had a false breakout. And you can see it really in the daily charts, right? And this is, by the way, this is the same line here. Let's delete this. Let's delete that really quick. And you can see really the risks are with the euro that we couldn't break out to the upside. And if we start trading back below like the 50-day DMA, so just imagine if the euro starts getting back below 108 on a more sustained basis, anybody who's long the euro or bearish the dollar is going to be they're going to be looking at exiting those trades. The risk that I see is that the euro posted a false breakout. If you look at the cable now, the pound, very similar. A lot of people are going to look at this as a false breakout, right? So if you look at this cable here, you might look at it from a horizontal trend line and say, wow, that is a false breakout. It is, but remember last week we drew, or is it last week or 2 weeks ago, we drew this descending channel that looks like this. See the red lines? We actually closed above that. So I'm not 100% convinced that the cable's ready to turn lower. But we do have UK GDP this week, so maybe that will move the needle. We got Bailey, he's speaking, but no one listens to Bailey anyway. Oh, did I say that? I'm sorry. Just our UK team members will get a kick out of that. Anyway, watch the cable though. Like the euro, I think we're really pivotal here. But I want to take you over to the Aussie dollar. Now, Australia has employment data coming out this week. We've talked ad nauseum this week about the underperformance of the Aussie dollar on our live shows. On the Face Show, the Morning Edge, the Daily Roundup. We've talked just extensively how weak the Australian dollar is. Look, the Aussie is synonymous with risk on. And when you have stocks that are moving higher, let me just go ahead and add the S&P here. When you have let me just do that here. We'll do it this way. It's fine. When you have stocks, you can see it in orange. All right, this is an orange line. When they move higher and they press higher, you expect the Aussie to follow suit. And it really hasn't over the last couple of weeks. You can see how the stock market is bolted higher and the Aussie it's floundering. What happens if the stock market actually starts to go down? If you look at that correlation and how strong it is, what happens if we start to see, some equity market pressure, which I think is going to happen. I think the Aussie is going to be, trading much lower as well. So I think, it'll reassert itself to the downside. So you got to be careful with the Aussie. Remember, employment data is this week. It's going to be really important to pay attention to in Australia. A couple other things I want to talk about with currencies. Remember the Bank of Japan, new BOJ governor Ueda. He'll be taking office on Monday. Kuroda is now officially out, and he's out of the BOJ. So notice how the dollar yen is staying below the 50 DMA. It rallied a little bit because yields popped up on Friday. The employment data was a little stronger than we had expected. But the fact of the matter is the US dollar Japanese yen overall, I think, is trading extremely heavy. The risks are, especially as you go into the remainder of this month, into April, the risks are that the BOJ governor, well, the BOJ starts discussing yield curve control. And, if they make some adjustments to YCC, or, they really start talking hawkishly about inflation and how, and their policy, we could actually see the yen start to really move this month. I think all of 2023 Asian trade is going to be a little bit more active, especially with the new BOJ governor and with the yen really in the spotlight here. So keep an eye on the yen, but also keep an eye on it because of the BOJ changeover this week. Look for comments to come out of the new BOJ governor, Ueda, that could really, really move the markets. Now, as promised, I wanted to talk about gold, silver, Bitcoin, Ethereum, I talked a little bit about the stock market, but before I do all that, let me just say that if you haven't tried out Forex Analytics, make sure you do so. One of the best ways to get involved in the Forex Analytics community is get into the trader funding program, because this way you can trade our money. You don't have to risk your own money. Like in this environment, with employment as dicey as it is, why would you want to risk your own money if you can risk our money? So you have to take an assessment. But if you think you're a good trader and you'd like to trade our money and keep 75% of the returns and take none of the risk, you should check the trader funding program out, because what it does is it actually gets you inside of the Forex Analytics community for a certain period of time based on which assessment you're taking. Because if you're taking a $25,000 evaluation or an assessment, you'll have access to Forex Analytics for a month. But if you are taking $1 million assessment because you want to trade $1 million of our capital, well, then you'll get 2 years of Forex Analytics community. Well, one of the cool things about the community is this is what it looks like. You have chat rooms like the general chat room that you see here. You have inside of these chat rooms, or inside of each room, you'll have conversations that break off. That you have the trades room. So if you want to see exactly what positions I'm taking or what positions other traders in the community are taking, you can do it right here. You have the macro chat room, which is called the Flowonomics room. You got the S&P and the indices room, which is an extremely busy chat room right now. So there's so many different places to be with like-minded people, because if you're going to trade our money, well, we want to make sure that you have trade ideas. We want to make sure you have people you can talk to. We want to make sure you have access to me and other team members from the team, or other members of the team. So make sure you check out Forex Analytics, the trader funding program. All right, back on to analysis. A couple other things I wanted to cover really fast is I wanted to talk about what's happening with gold and silver. I'm a little fearful after talking with Jim Welsh of Macro Tides at the end of the week this week. He sees this as a completed move in gold higher from an Elliott wave point of view. And that is a little concerning to me, because if, gold has this bullish pennant, right? You can see it right here, bullish pennant. It's trying to play out, but because it was a triangle, triangles, usually this is a push outside of a triangle, which you see here could be the last part of a move, if you will. I think gold's going to be I'm going to be a little nervous about gold and being bullish gold if we get back below this 1930 level. So watch it, because if we can't make a new high, you're going to get traders that start looking at gold saying, well, we had a lower high longer term. Now, I wouldn't be worried about it just yet, but the fact of the matter is that if the dollar starts to strengthen, you could see gold weaken. And that means, going back to the analysis of the euro and what we were looking at with the euro and the sterling, if they did put in some false breakouts, like right here, and we start to see some strength in the dollar, gold could roll over. Now, silver, very similar situation, but what makes me a little bit more nervous about silver is that we had a very long-term breakout. Daily sentiment, the DSI, or the daily sentiment index, is extremely bullish right now, but extreme bullish. And when you get extreme bullishness, it's kind of like, you got every person on a big boat on one side of the boat, it might capsize. And when you have everybody's extremely bullish silver, you have to start being a little bit more cautious. Now, I am bringing this up because, you got a breakout here. And for right now, we have to treat it as a breakout in silver. But if for some reason we get back below $24, if gold gets back below, 1930 is the real key support that I'm looking at here. But then you start looking at Bitcoin and Ethereum, similar situations, but Bitcoin has this wedge. It's really struggling to break higher. And then Ethereum, very similar to like gold. You can see Ethereum tried to break in a new high, but fact is we are not able to capitalize on that. So what happens if like Ethereum gets back below the 50 DMA, if you start to see Bitcoin slip down towards the DMA, I don't know why I said, I don't even know what I said, 50 DMA, then you are now starting to risk some reversals in some of these like, these assets like gold, silver, Bitcoin, Ethereum, which tend to be opposite of the dollar. So that's something that I think we should really be paying attention to as we go into next week. Now, talking about next week, I know I discussed our key levels in the S&P, but really quick, talking about next week, some of the more important data is going to be the CPI data that's going to be on Wednesday. All right, that's going to be really important for us to be looking at. We also have Australian employment data Wednesday night, or that will be Thursday morning in Australia. So pay attention to that. We also have UK GDP. That'll be early Thursday morning in the UK, but also, it's late Wednesday night if you're here in the US. We have producer prices on Thursday, and then we have retail sales. One of the things that does worry me here in the US is prices are high everywhere. Whether you're at the grocery store, whether you're buying a new car. I was just reading an article about new car prices and what the average loans are here in the US because of interest rates and car values. And I'm like, if you take the average annual income in the US and you start dividing it by home prices, autos, auto loans, home loans, mortgages, groceries, energy, where's the money coming from? And how is the consumer, which you take the United States, which is a consumer-driven, services-driven economy, where's that money going to go? It's not going to be spent in retail sales, aside from things that are a necessity. When does the excess start getting trimmed? And that's the thing that we should be watching. Is on Friday we have retail sales data, which in my opinion is going to be a market mover. So guys and gals, I want to say happy Easter or happy Passover or whatever holiday you are celebrating. I hope you have a wonderful celebration with your family and friends. Once again, if you like these videos, make sure you give us a thumbs up, subscribe to the channel, and I'll see you Monday morning on the Face Show. Thanks for listening in and spending your time with me today. Bye-bye. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.